Hey, Thomas Castelli here again for another episode of Tax Smart Q&A, and in this episode I'm going to answer the question, what is the ideal entity structure for short-term rental properties from a tax perspective? Before I dive right into that, make sure to destroy that like button so you can help more real estate investors become tax smart, all right? So the question is, what is the ideal entity structure from a tax perspective for a short-term rental property? And the answer to that question really is going to depend on your specific circumstances. However, if you're going to be the sole buyer of the short-term rental property, chances are an LLC taxed as a disregarded entity is going to be the best entity structure. And the reason for that is because for tax purposes, the LLC is going to be treated as if it doesn't exist, and it's going to be reported on your Form 1040 as if it didn't exist, and it's really only there for legal purposes. Now, if you do have multiple owners, then chances are an LLC tax as a partnership is going to make the most sense. The one thing you do want to avoid, generally speaking, when it comes to rental properties, whether short-term or long-term, is putting rental properties in a corporation. That's whether it's going to be an S corporation or C corporation. And the reason for this is that it becomes extremely difficult to restructure these entities without causing a tax event or losing out on the tax benefits. For example, if you use a C corporation, it is not a pass-through entity, and the losses will not pass through to your Form 1040, which means you cannot use them against your active income, such as your W-2 or active business income, if you're trying to use the short-term rental loophole. And the good news is with an LLC that's taxed as a disregarded entity or a partnership is you can always make that election to have it treated like a corporation some point down the line if it ever does make sense to do it, right? Limited circumstances where it would, but if it does, you have that flexibility. The point is you don't want to start out with a corporation in pretty much almost any circumstances. Now, having said all that, to summarize, if you are going to be investing in a short-term rental property as an individual, you're going to be the sole owner, chances are an LLC that's disregarded for tax purposes, in other words, as taxes or sole proprietorship, is going to make the most sense. And if you're going to be investing with multiple owners, then chances are a partnership is going to make the most sense. So that's all for today. If you do want to catch more Tax Smart Q&A episodes, be sure to hit that subscribe button to make sure you don't miss out on future releases. And if you do have questions about entity structuring for your short-term rental property, go ahead and drop them in the comments below, and we'll go ahead and get you an answer.